So morning session we completed gas, electricity, water supply. We completed education facility. We completed domestic servant facility. So we completed 3 points: gas, electricity, water supply, education facility, domestic servant facility. Now we are left with 4 points: transport facility, medical facility, leave travel concession, motor car facility. These 4 prerequisites are left, and then we are left with the topic of relief under section 89. We are left with the topic of relief under section 89. So we will move on to transport facility. We will move on to transport facility. For this I don't have the flow chart. A paragraph form notes is given to you here. This transport facility, I will try to make a flow chart here. Two possibilities. What we are discussing now? Transport facility. In your notes, it is on page number 6060. Prerequisite in respect of transport facility. Possibility number 1. Employer is into transportation business. Means employer is a transporter. Second possibility, employer is not transporter. If employer is not transporter, in that case, this provision is not applicable. This provision is not applicable. If employer is transporter, we can say if employer is railways, means employee is working with Indian Railways. Employee is working with Indian Railways, or employer is airlines. Then transport facility is not taxable. Then transport facility is not taxable. Are you aware that if you are a railway employee, then once in a year, if you want to go at any place in India, railway is going to provide you free tickets for yourself and your entire family. Are you aware about such policy of Indian Railways? Indian Railways is having an employee policy wherein if employee wants to go to any place in India once in a year, then Indian Railways will provide the ticket for the employee along with his family members. So here we say that if employer is transporter, if he is working, Dixit says twice. Dixit says such facility is available twice in a year. So here I am talking about the same situation wherein railway or airline has provided transport facility to employee along with his family member. That facility is not taxable at all. Other cases. Other cases. Other cases means other than railways and airlines. Now say for example, if you go to Bangalore, if you go to Bangalore, then the Karnataka state government is having Volvo buses. KSRTC, it is called as Karnataka State Road Transport Corporation. KSRTC. So you can travel in a KSRTC bus. It is a Volvo bus. You can travel in that Volvo bus from Bangalore to Mumbai or maybe Bangalore to Chennai. So long journey traveling is also possible in buses. Sleeper coaches are available inside the buses also. So other cases means you are working with some other transport organization. And in that case, facility is provided to employee for personal or private journey. See, if it is facility is provided for official journey, then there is no personal advantage, nothing can be taxed. So by default, we mean to say personal or private journey only. In this case, what should be taxable value of perquisite? For example, you are working as an employee of KSRTC. You are working as an employee of Karnataka State Road Transport Corporation. And say for example that Karnataka State Road Transport Corporation bus goes to your native place also. And Karnataka State Road Transport Corporation has not charged you anything. And you went to your native place when that Karnataka State Road Transport Corporation bus was going to that location. You went to your native place and you came back after a few days. So your employer Karnataka State Road Transport Corporation did not charge you anything. In that case, definitely something should become taxable to you because a private personal journey transportation facility was provided to you. So the question is what should become taxable? Generally for perquisites, what is taxable is amount incurred by employer minus amount recovered from employee. But here what should become taxable? Government says whatever amount your employer Karnataka State Road Transport Corporation is charging to general public, whatever your employer is charging to general public, you take that amount, from that you deduct amount recovered from employee, balance is taxable value of perquisite. Now say for example, you went in KSRTC bus to your native place and general KSRTC is charging say 800 rupees one way charge to general public, and you went and you came back. So KSRTC bus fare was 1600. So that 1600 is amount charged by KSRTC to general public. That should be taken into account for the purpose of valuation of perquisite. So 1600 you should take. From that, if KSRTC has recovered some amount from the employee saying that we will charge you only 200 rupees for one journey, for two journey coming back 200, so we will charge you 400. To the general public we are charging how much? 1600. To you we will charge only 400 rupees. In that case, what is the extent of benefit? 1600 minus 400, that is 1200. So what is that rule? Taxable value of perquisite is what? Amount charged to general public. Amount charged to general public minus amount recovered from employee. Minus amount recovered from employee. Is that very, very clear? Yes? Have you understood this? So this provision is applicable when When the employer is into a transportation business, if employer is not into transportation business, this provision will not apply. Then we have that na, traveling, accommodation, touring, other expenses. That point will apply. Employer is into transportation business, this point will apply. Point 1 says this sub-rule is applicable if employer is engaged in carriage of passenger or goods. In other words, he is into transportation business. The benefit is provided to employee and that benefit is on account of provision of any conveyance facility owned, leased or made available by any other arrangement. Whether that vehicle is owned by employer or it is taken on hire purchase or it is taken on lease or it is taken on installment system, those things will not make any difference. The provision of conveyance as mentioned above is for personal or private journey and this is either free of cost or at concessional rate. This provision of facility is for personal or private journey. The value taxable in the hands of employee shall be value at which such benefit or amenity is offered by such undertaking to the public as reduced by the amount required from employee for such benefit or facility. Is that very clear? Point 5 says this sub-rule do not apply to the employees of airlines or railways. Yes. Along with this transportation facility, we will refer one more point on page number 66. Page number 66 of your textbook. See this point number C. Free transportation facility for employees of railways and airlines. This is falling in the list of perquisites not taxable. Free transportation facility to employees of railways and airlines, this is not taxable. Number two, I'll explain you. I am not aware about specifically about the city of Chennai, but in Mumbai, we have a location called as Powai. There the office of Larsen and Toubro, L&T office is situated there. We have a place called as Powai. There L&T office is situated. Now, all the employees who are working with L&T, they will come to a particular place. From that place, bus will pick up everyone and they will drop them to the office. And in the evening, once again, bus will pick up all those employees from the office and they will drop them at certain pre-decided place. So, employer has provided you conveyance facility. Means, one more thing. Have you heard about people working in BPO and KPO? Business process outsourcing and knowledge process outsourcing businesses? There you have to work in shifts. There are night shifts also. So, those employees who are working in BPO or KPO in night shifts, they have the pick up and drop facility. So, there will be office cab. Office cab will come to home. They will pick up the employee and they will drop the employee at home. So, this pick up and drop facility plus transportation facility, conveyance facility from residence to office, office to residence. If some conveyance facility is provided to employee, that is totally exempt from tax, no tax will be levied. So, conveyance provided to go to office from home and to return to home from the office is considered as used for official purpose and therefore not taxable as perquisite. It is not taxable as perquisite. See, normally traveling from residence to office, office to residence is considered as personal purpose. It is considered as personal purpose, but only for the purpose of conveyance facility and motor car facility, it is considered as official purpose. And since it is considered as official purpose, tax will not be levied, it will be totally exempt from tax. Point number A. Point number B, now you can remove. Point number B, you can remove this point, delete this point. No more valid. Point number A, I will explain you. In Mumbai, we have a very big Godrej compound. In that Godrej compound, we have an office of TCS. In TCS office, there is a BPO center. In that, inside the office, they have indoor game facility. So, you can play chess, or you can play carom, or you can play table tennis, and there are some music cabins. There are small cabins wherein they have kept the bean bag, and there is a headphone. You can just pick up the headphone, select the song, sit on the bean bag and listen to the song, or you can stay calm there. So certain recreational facilities provided to employees. Indoor games are there, music system is there, so people can enjoy that. So all this recreational facility which is extended to group of employees is also totally exempt from tax. So whatever recreational facility is provided during the working hours, tax will not be levied. So generally in case of BPO and KPO, such kind of recreational facilities provided. What you should do now, once, I do not know whether you have seen or not, once you should go on YouTube and see video of a office of Google, Google's office. In USA, the office of Google, if you see, it is like a city. Inside the office itself, you have everything. Right from food to separate room to stay there, everything. You can't imagine it. You can't imagine every facility is there inside the office itself. If you get a time, free time, just take out 10 minutes and you go to YouTube and find out Google's office in USA. Inside scenes will be there. Excellent office. A very big office. Might be, it is as good as a small city. So, in that there are a lot of recreational facility. That recreational facility will be totally exempt from tax, not taxable at all. So, we have completed this small point. What is that? Transportation facility. Transportation facility. Now we are moving on to medical facility. This medical facility is explained here in a paragraph form in one page, and this is summarized here in a flowchart form. 3-4 years back, CA Institute had asked 8 marks question only on one perquisite, and that is medical facility. On medical facility, they created a question of 8 marks. From the chapter of income from salary, they did not ask anything except this. And this medical facility was asked for 8 marks. A comprehensive question on this was made. So, salary chapter, there are a lot of perquisites, but you can't leave any perquisite in option because you do not know CA Institute can do anything. So, we are talking about medical facility. Medical facility is different and medical allowance is different. Medical allowance means fixed amount of money given by employer to the employee, irrespective of the expenditure incurred. When the employer gives fixed amount of money to employee every month, then that is called as medical allowance. Here we are not talking about medical allowance. Here we are talking about medical facility. Medical facility, you can take the advantage only if you fall sick, only if you fall ill, then only you can take the advantage of this facility. Now say for example, employee has fallen sick, then he can get the medical treatment. Employer may incur some cost for the medical treatment. Whatever cost employer has incurred, mostly it is exempted from tax, but in certain cases it is also taxable. See, in India, we don't have the tendency to go to doctors. If you fall sick, generally 2-3 days, nobody cares. The person who has fallen sick, he will also not care for himself. After 2-3 days, if he feels that now the situation is going to go beyond my control, then he will go to a doctor. And that doctor will be his family doctor. Generally, family doctors in India are MBBS. So, when you visit a family doctor, he would give you generic medicines. He will give you painkiller like generic medicines. So he'll ask you to visit one more time, one more time. Once you have 3, 4 visits, thereafter also there is no improvement in your situation. Then he will suggest you a specialist. And the moment you go to specialist, he would ask you to take out a lot of reports. Then he would study the reports. He would identify what is the problem. And then to resolve that particular problem, he will give the medicines. And if at all he feels that you should be under supervision of a doctor, then he will ask you to get hospitalized. So, you falling sick and you getting admitted to a hospital, there is a very long journey in this between those two events. See, in India, a lot of people die because of cancer. Cancer is curable, but a lot of people die. The reason is the cancer is not getting detected at the earlier stage. When the person comes to know that he is suffering from cancer, he might be already into a second or third stage, or maybe in the last stage. If that gets detected at the earlier stage, it can be definitely cured. So, in India, we don't have a tendency to go to a hospital or get our body checked up once in a year. We don't do any preventive health checkups, etc. Now, since last 8 to 10 years, preventive health checkup packages have already started. In hospital. If you go for a package of 2,000, they will do some 45-50 different tests. So such kind of preventive health checkup packages are already there in the market since last more than around 8 to 10 years. But people don't have the tendency to get themselves tested. So reaching to a hospital is a very big journey in India. It is a very long journey. So when we talk about medical facility, we are talking about a situation wherein severely you have fallen ill severely, and now you require the hospitalization. So you have fallen sick, you are hospitalized, and the hospital is situated in India. Hospital is situated in India. Either you or your family member has fallen ill, and you or your family member is hospitalized. That hospital in which you are admitted is owned by employer or it is maintained by employer. Now, for example, you are working with a Apollo hospital in Chennai. You are an employee of Apollo hospital. So, don't you feel Apollo hospital will definitely provide you some concession? Either Apollo hospital may provide you free treatment to you and your family members, or Apollo hospital may provide some concessional treatment. Whatever is the hospitalization bill, they would give you say 60-70% discount on that. So government says what? Government says if you have got a medical facility in a hospital maintained by employer, we will not charge you any tax. That facility is totally exempted from tax. No tax will be levied. Today morning session also I told you that in the chapter of income from salary, government is not having intention to levy tax on 3 things. Number 1, if anything is related to your child. Number 2, if anything is related to your health. And number 3, food. 3 things. Now government doesn't have the intention to levy the tax. Therefore, they say it is totally exempt from tax. So number 2, you have fallen sick and you are hospitalized, and that hospital is a government hospital or a local authority hospital. In government hospital, local authority hospital also, every treatment is not totally free. You have to pay money. So that amount is paid by your employer. That amount is paid by your employer. That will be totally exempt from tax. Tax will not be levied at all. Third possibility is hospital is approved by Chief Commissioner of Income Tax. Hospital is approved by Chief Commissioner of Income Tax for treatment of specified disease. For treatment of specified disease. For example, in Mumbai we have a location called as Parel. In Parel, we have Tata Memorial Hospital. Tata Memorial Hospital specializes in the treatment of cancer. It specializes in the treatment of cancer, and the treatment cost is very highly subsidized. I have seen people coming from various parts of the country to Mumbai only to get treated in a Tata Memorial Hospital. That Tata Memorial Hospital is also approved by Chief Commissioner of Income Tax for the treatment of cancer only. So different hospitals can be approved by Chief Commissioner of Income Tax Department for treatment of different diseases. I just give you one example saying that Tata Memorial Hospital is approved for treatment of cancer. So if an employee is suffering from cancer and he has got a treatment in a hospital which is approved by Chief Commissioner of Income Tax, and employer has paid the bill. Employer has paid the bill. In that case, amount will be totally exempt from tax. Nothing will be taxed at all. So, point number 1, 2 and 3, if hospital is owned by employer. In Chennai also you are having Rai Memorial only for cancer. Okay. I am not aware about other parts of the country, but I have seen a lot of people traveling to Mumbai only for getting treatment of cancer. And recently also, just 15 days back, I came across one of my friend. He was saying me that one of his relative was getting a treatment of cancer in Tata Memorial Hospital. Other hospitals for that same treatment were charging 2 lakh rupees, whereas in Tata Memorial Hospital, the bill amount did not cross even 50,000. So they are providing this hospital treatment of cancer at a very reasonable price, plus the facilities are excellent doctors, very highly experienced doctors also. So in India, we should have such kind of hospitals. It's a very big country, so we should have, maybe every city should have such hospital, because there are a lot of people dying of cancer, etc. The only thing is, before that, I would like that everyone should go for a normal body checkup at least once in a year or once in 2 years. So if anyone is suffering from some severe disease, that can be known to him at a very initial stage, and it can be treated very easily at a low cost without more suffering also. So I do not know whether this Chennai hospital is approved by CCIT or not. But yes, I think it might be approved. We'll have to look at the notification. But Tata Memorial Hospital is, I am very much confirm about it, it is approved. So if Chief Commissioner of Income Tax has approved the hospital and you have got the treatment in that hospital, and if your employer has paid the bill, that would be totally exempt from tax. Nothing will be added to your income. Fourth point is any other private hospitals in India. Any other private hospitals in India. Along with this point number 4, I would like to take up this note number 2. I am talking about around 2-3 years back. Any other private hospital in India, if you are getting admitted to any other hospital means that hospital is neither not owned by employer, not owned by government, not owned by the local authority, and it is not approved by Chief Commissioner of Income Tax. It is other private hospital, but it is in India. In that hospital, you are being treated and your employer has paid your bill. In that case, before 2 years, what was happening was up to 15,000 tax was not levied. An amount of 15,000 tax was not levied. If the amount exceeds 15,000, then excess amount was becoming taxable. One more thing, see, there are certain illness, like someone is suffering from say diabetes. So he knows that till I die, I'll have to take insulin. Do you understand? Insulin. You have to inject. See, it is similar to vaccine, but that injection you can take at in any part of the body. You can inject yourself. A diabetic person, if he is highly diabetic, he will have to take insulin every day. Now he knows that he is suffering from that illness. He knows that he has to take insulin. So he is incurring a lot of medical expenditure without getting hospitalized. He is incurring a lot of medical expenditure. in some cases that medical expenses are reimbursed by the employer. They are reimbursed by the employer. Just before 2 years now, that reimbursement was exempt up to 15,000 and the reimbursement in excess of 15,000 now, it was taxable. Reimbursement in excess of 15,000 was taxable. So this point number 4 is connected to this point number 2. Reimbursement of medical expenses. Just before 2 years back, up to 15,000 there was an exemption. In excess of 15,000 tax was levied. But now that exemption is removed, now entire amount is taxable. Now entire amount is taxable. This amendment was introduced by Mr. Arun Jaitley. He took away this benefit and he gave some other benefit. I will explain you what he did just before 2 years. See, reimbursement of medical expenses, reimbursement of medical expenses, it was exempt up to 15,000. It was exempt up to 15,000. Then we have transport allowance. Do you recollect transport allowance? Transport allowance. In allowance in partly taxable, partly exempt category. Category B, children education allowance, hostel expenditure allowance, and the third one is transport allowance. Right now, as of now, transport allowance, only a disabled person can get the exemption to the tune of 3,200 per month. Just before 2 years, even the normal people were eligible to get the exemption, but the amount was 1,600 per month. That exemption is also withdrawn for normal people. Now it is there only for disabled persons. So that transport allowance 1,600 rupees per month multiplied by 12 months, that is 19,200. So total, how much is the total? 34,200. This 34,200 this benefit was withdrawn just before 2 years. This benefit was withdrawn. So there is a loss of 34,200 when it comes to exemption. To compensate this 34,200 benefit withdrawn, government came out with section 16 clause 1A. What is that? Standard deduction. See, standard deduction was there in the Income Tax Act up to financial year 2005-2006. Then at that point of time, finance minister was Mr. P. Chidambaram. From the year 5-6, he stopped giving standard deduction. Then Mr. Arun Jaitley, just before 2 years, he withdrew these two benefits. To compensate this, he started with a standard deduction of 40,000. So benefit to the tune of 34,200 was withdrawn and benefit to the tune of 40,000 was given. The point is reimbursement of medical expenses. That benefit you can get only if you are incurring some medical expenses. Standard deduction is available to everyone. So government said that instead of giving a benefit of 34,200 and that too for specific situations, we are cancelling this, and in place of that we are introducing a standard deduction which will be 40,000. This deduction will be available to everyone. In the next year, this 40,000 was cancelled. The amount was increased to 50,000. So as of now, the amount is how much? 50,000 rupees, 50. So if you come across any old question of medical facility, see income tax you should not refer to the old notes. You should not refer to the old notes, old module. You should refer to the new one, amended one. Because you may not know that how many provisions are revised or amended. So this provision is revised. So if you are getting admitted in any other private hospital in India, or you are incurring some medical expenses and those medical expenses are reimbursed, then it is totally taxable. Now it is totally taxable. Earlier exemption was available to the extent of 15,000. Excess was being taxed. Now entire amount is being taxed. So This part is over, left hand side part is over. Right hand side. Right hand side is for the medical treatment you are going outside India. For the medical treatment you are going outside India in some other country. Because you feel that I can get a better medical treatment in USA. That is what you may feel. In India also we have excellent quality of hospitals and excellent quality of doctors. But you may feel that in USA there is a better medical facility, better medical treatment. In fact, when you go to USA, you get treatment in some hospital, you may find out that there also the doctor who is treating you is Indian only. Anyway, but you are going outside India for medical treatment. When you go outside India and your employer is ready to spend money for you, now, in that case, he doesn't spend only on medical treatment. You have to incur two more costs. Number one, medical treatment cost you have to incur. When you go outside India to get the medical treatment, you have to incur number one medical treatment cost. Definitely for getting a medical treatment, you will not go to Pakistan or Nepal, Bhutan, Sri Lanka, etc. You go to some developed country. So you go to, maybe you go to Italy or you may go to US, etc. So you'll have to incur medical treatment cost, plus you have to incur travel cost. Flight cost, going to that country and coming back. Plus you have to incur the stay cost. See, in India, there are very small hospitals. In a 1500 square feet space, a doctor will build a hospital. In India, on the bed, patient is lying. Just below the bed, his relative is lying. So, such kind of facility will not be given outside India. Patient will stay in a hospital and his relative has to stay either in a hotel or in the hospital itself. There will be a separate building in which there will be small rooms. So a relative of patient who is attending the patient, who has come to the hospital along with the patient to look after the patient, he cannot stay with the patient. He has to stay in a separate room. For that, hospital may charge some amount of money also. So if you go outside India for treatment, then you have to incur three costs. Number one, medical treatment cost. Number two, travel cost. And number three, stay cost. What will be the tax treatment of different costs which are incurred by your employer for your benefit? Now, for example, you are going outside India for medical treatment. Entire cost is borne by your employer. Your employer is bearing the entire cost. What will happen in that case? So here we are saying that medical treatment cost will be exempt up to amount approved by RBI. See, you are not spending in Indian rupees. When you go outside India, you spend in dollars. You are not having dollars. You will exchange your Indian rupees with the RBI for dollars. So in India, we don't have surplus foreign currency to give you. You go outside India for medical treatment. We agree that if you want to go outside India, we don't mind you going outside India. But outside India, you get the treatment in a normal hospital. Na? Why you want a 5-star facility? So in a normal hospital also, you can get an excellent quality of treatment. But if you want to get admitted to a very big hospital outside India also, then also you get admitted. We are not concerned with that. Let your employer spend money for that also. But we are not going to offer you such a huge amount of exemption. Therefore, government has given power to RBI to come out with a notification, and RBI has already come out with a notification saying that for cancer, this much is the notified amount. For different diseases, some amount is notified. Your exemption will not exceed that amount. Whatever amount RBI has given, your exemption will be restricted to that amount only. In the examination, this amount will be clearly given to you in the question. So medical treatment cost, it is exempt up to amount approved by RBI. It is exempt up to amount approved by RBI. But if you have incurred more cost and your employer has paid more cost, that excess will become taxable. For example, your employer has incurred a cost of say 5 lakh rupees for medical treatment, your medical treatment or medical treatment of any of your family members. He has incurred a cost of 5 lakhs. But the amount approved by RBI is say 4 lakhs. In that case, 4 lakhs will not be taxable. Have you incurred excess cost? Yes. How much excess as compared to the amount approved by RBI? 1 lakh. That 1 lakh will be taxable to you. That 1 lakh will be taxable. Have you understood this point? So this is first point, medical treatment cost. Whatever medical treatment cost you incur outside India, it is incurred by your employer. In that case, you will get exemption to the extent the amount is approved by RBI, Reserve Bank of India. Excess amount is going to be taxed to you. Next is travel cost. Next is travel cost. Forget about the travel cost. We will discuss the travel cost later. Let us first move on to the stay cost. Stay cost. You tell me, say for example, one person is suffering from a disease and is going outside India for getting the medical treatment. Along with that, how many people should accompany him? How many people should accompany a sick person? Should the entire family accompany him? Should the entire family go outside India along with him? They are not going on a tour. They are going for a medical treatment. So how many people should accompany the patient? Generally, only one person should accompany the patient. Generally, only one person should accompany the patient. So, say for example, employee has fallen sick, he is getting a medical treatment outside India and 3 people are accompanying him. So, there are total 4 people, patient plus 3 persons accompanying him, that is 3 attendants. So, government says generally along with the patient only one attendant is enough. 3 persons are accompanying you. What is the purpose of that? An employer is fool that he is incurring cost of all these people also. In that case, government says we are not going to offer you exemption for all of them. We believe that along with the patient, only one attendant is enough. So, if more than one person is accompanying you, whatever cost your employer has incurred for those extra people, that entire amount will become taxable to you. That entire amount will become taxable to you. Plus, whatever stay cost your employer is incurring on you as a patient, plus one attendant, that will also be exempted to the extent amount is approved by RBI. Excess will become taxable. See, you outside India, when you go for a medical treatment, you will have to stay in a hotel. You will not directly from an airport, you are not going to go to a hospital. From airport, you will go to a hotel. You will take rest for 1 day. Then you will get admitted to the hospital. So, hotel cost will be incurred, stay cost in hotel will be incurred. So, which hotel you should select generally? Normal hotel, You have selected 5-star hotel to stay. And your employer is full to pay the amount bill of the 5-star hotel. Government says we are not full. We are not going to give you unlimited amount of exemption. We have asked the RBI to decide the amount and you will get the exemption as per the amount notified by RBI. So government says stay cost of patient plus one attendant. Stay cost of patient plus one attendant will be exempt. And this exemption also will be up to amount approved by RBI. This exemption will also be up to amount approved by RBI. Excess will be taxable. Excess will be taxable. So if your employer has incurred a stay cost which is higher than the amount which is approved by RBI, that excess amount in excess of amount approved by RBI will become taxable to you. Cost of extra attendance is fully taxable. Cost of extra attendance is fully taxable. Say for example, three persons are accompanying the patient. Then how many extra attendants are there? 2 extra attendants. The stay cost of those 2 attendants will become fully taxable. It will become fully taxable. Yes, have you understood the stay cost? Treatment of stay cost. Let's move on to the last point, that is travel cost. Travel cost means flight cost of going to that country and coming back. Travel cost, government says if the gross total income of the employee is less than or equal to 2 lakhs, If the gross total income of employee is less than equal to 2 lakhs, means his income is too less. His income is too less. It is too low level of income. To that employee, if we levy tax on this travel cost, then he'll have hardship. He'll face hardship, difficulty in payment of tax. Therefore, government says travel cost now, if the gross total income of an employee is less than or equal to 2 lakhs, then travel cost will be exempted from tax. Travel cost will be exempted from tax. We will not levy any tax on the travel cost. But if the gross total income is more than 2 lakhs, see this amount is also very old amount. Actually here also government should put an amount of at least 8 to 10 lakhs. But this amount is also too less. They have not revised since last more than 15-20 years. So government says if the gross total income is more than 2 lakhs, then travel cost will become fully taxable. So whether travel cost is exempt or not depends upon what? Whether travel cost is exempt or not depends upon what? Yes? Whether travel cost is taxable or whether it is exempt, it depends upon what? It depends upon gross total income. And what is gross total income? Yes, what is gross total income? Gross total income is nothing but in total of all income, total of income under all 5 heads of income. So income from salary, income from house property, profits and gains of business profession, capital gain, other sources. If you add all these amounts now, then you will get the amount of gross total income. Based on this, you have to decide whether travel cost is taxable or travel cost is exempt. But my point is, don't you feel medical facility perquisite is part of salary income? This medical facility perquisite, unless and until you decide whether this medical facility perquisite is taxable or not, and to what extent it's taxable, you can't decide the amount of salary. If you can't decide the amount of salary, how can you decide the amount of gross total income? Because your salary will include the taxable component of medical facility. Salary will also include the taxable portion of travel cost. See, you have to find out whether travel cost is taxable or exempt. Taxability of travel cost is decided based on gross total income. But for calculating gross total income, you should also have the amount of income from salary, na? That is what you are calculating. So poverty is a vicious circle, na? One parameter is dependent on other one, the other one is dependent on the first one. That is the situation here. This has become a vicious circle. Unless and until you decide whether the travel cost is taxable or not, you can't get the amount of taxable salary. If you can't get the amount of taxable salary, you can't decide what is gross total income. If you can't decide what is gross total income, you cannot decide the taxability of travel cost. So to break this vicious circle, government says this gross total income now, which we are talking about, this gross total income should be excluding the travel cost. This gross total income is excluding the travel cost. Not previous year, this year only. You have to find out the gross total income of this year only, but this gross total income you have to find out excluding the travel cost. So take your entire basic salary, take all the allowances, take all the perquisites, even take medical facility treatment cost. Medical treatment cost, stay cost, everything should be taken into account. Only travel cost should be ignored. So take everything. Calculate your gross salary, claim deductions under section 16, clause 1A, clause 2, clause 3, whatever are available to you. Calculate your income from salary, house property, business profession, capital gain, other sources. Then see what is your gross total income. If your gross total income is less than equal to 2 lakhs, anyway travel cost is not taxable and you are also not taken into account. But if your gross total income exceeds 2 lakhs, then travel cost is taxable. What you will do now? You will go and revise the calculation of salary by adding this travel cost to your salary income. Have you understood this very clearly? So while you calculate your gross total income, you will also need the amount of income from salary, and this amount of income from salary is what? It is excluding travel cost. It is excluding travel cost. Yes, have you understood this very clearly, each one of you? This point now is not written in the notes, you can write, you can note down. You can put a star mark here. Against the gross total income, you can put the star mark. Against this gross total income, you can put the star mark. And write here, excluding travel cost. We have a practical question on this. Very good question. Rizwan is asking a question, sir, what if the employer is having a hospital outside India? Will it be covered by the left hand side, hospital maintained by employer, or will it be covered by right hand side? If employer is having hospital outside India, then what? Then you will be covered by right hand side, medical facility outside India. See, the point is, for getting a medical treatment, are you going to also incur the travel cost and stay cost or not? Generally, see, in India also you may incur some travel cost, stay cost. Say for example, you are in some tier 2 city for medical treatment, you have come to Mumbai or Chennai. Here also will incur travel cost and stay cost. But while making the provisions, government has not thought of that. Government has thought that you incur the travel cost, stay cost when you go outside India. See, when you go outside India, travel cost, stay cost, those amounts are very big amounts. They are not small amounts, they are big amounts. Therefore, government has thought about hospital facility outside India. So, if the hospital is maintained by employer outside India, no exemption. Taxability will arise as per this only. Is that very clear? So, this medical facility, this flowchart is over. Notes, point number 2 is over. Point number 1 says what? Now, my question to you is, do you believe that employer would be incurring such a huge cost for employee nowadays? Do you believe so? That employer might be incurring such a huge cost for medical treatment of the employee along with his family members? Definitely not. Definitely not. So, if you join any multinational company, once you become a chartered accountant and you join any big company, multinational company, then what will happen now? First day itself, employer will ask you to submit your identity card, address proof, age proof, etc. Your details along with the details of your family member, and first thing what he will do is, he will take up the health insurance policy. He will take up the health insurance policy for all the employees along with their family members. So, if some employee has to go through the hospitalization, that cost employer will not be required to bear. That will be borne by the health insurance company. So, in practical life, most of the cases, employer would take health insurance policy. He would pay the premium to the insurance company so that employer is also secured and employee is also secured along with his family members, and the risk is transferred to insurance company who are into the business of taking risk. So, if employer has made the contribution to staff group insurance scheme, employer has made contribution to what? Staff group insurance scheme. Then that premium paid for staff group insurance scheme will be totally exempt from tax. Will be totally exempt from tax. See, generally employers would take group insurance only because in case of group insurance, the premium will be comparatively lower. So, for example, in your company there are 5,000 employees, then your company will contact some insurance company saying that we need to take health insurance policy for 5,000 employees per plus two family members of each of those employees. So we are going to take health insurance for 15,000 people. In that case, insurance company would offer group insurance to that company. In group insurance, premium will be very less. So whatever health insurance policy premium is paid by the employer for the benefit of employee along with his family members will be totally exempt from tax. Some of you might be thinking that no, just 2-3 perquisites back, 17 to clause 5 we discussed, the insurance premium paid by employer is taxable. But that was life insurance premium. This is health insurance premium. If employer has taken out your life insurance policy and is paying the premium for that life insurance policy, then that is taxable in section 17 subsection 2 clause 5. But if employer has taken out health insurance policy and is paying health insurance premium for you along with your family members, then it is totally exempt from tax. So life insurance premium paid by employer is taxable, whereas health insurance premium paid by employer is totally exempt from tax. So in this notes we have completed point number 1 and 2. Next is point 3. Payment of annual premium by the employer on personal accident policy effected by him on employee. This is also totally exempt from tax. This is a personal accident policy. Personal accident policies are specifically for accidental deaths. They are for accidental deaths. So, 3 premiums are covered, 3 different policies. Number 1 is life insurance policy. So, life insurance policy premium paid by employer is totally taxable in section 17 subsection 2 clause 5. Health insurance policy premium paid by employer is exempt from tax, and personal accident policy premium paid by employer is also totally exempt from tax. Is that very, very clear to you? Now, this medical facility discussion is over, but here very, very important point to be noted is, see, when I started perquisite, when I started with the perquisites yesterday, I told you that perquisite is any benefit, amenity or facility provided by whom? Provided by employer. To whom? Either to employee or to employee's member of household. And for the member of household, now we have a definition. Member of household includes number 1, spouse. Number 2, children and their spouses. Now the point is that spouse is, which spouse will be covered in the member of household? Dependent spouse or independent spouse? Any nature. Dependent, independent, both are covered. Second point is children. Children and their spouses. Dependent, independent, both are covered. Third point is parents. Dependent or independent, both are covered. And the fourth point is servants and dependents. Fourth point is servants and dependents. So in that point number 4, I explained you the word dependent would cover a lot of people. All those people who are financially or non-financially dependent on employee, depend on that person, will be covered by the dependent word. So if you refer to the definition of member of household, brother is not covered in that definition, sister is not covered, grandparents, paternal grandparents, maternal grandparents, your father-in-law, mother-in-law, all these people are not covered by the definition of member of household. But those all people can be covered by that term dependent, provided they are dependent on you. Do you recollect this point? Or do you want me to go back to that page? Yes? Or you want me to go back to that page? Once again. See this, page number 52 of your book. Page number 52. Yesterday when we started this perquisites, at that point of time we had discussed this. Employer has provided any benefit, amenity or facility either to employee or to employee's member of household. And this definition of member of household includes number 1 spouse, number 2 children and their spouses, number 3 parents, and number 4 servants and dependents. And the word dependent is much wider in scope. That will include any person who is financially dependent on someone. So if you are an employee, then any person who is financially dependent on you would be covered by the definition of term dependent. So this word dependent may include your dependent brother, dependent sister, dependent paternal grandparents, dependent maternal grandparents. It can also include dependent father-in-law, dependent mother-in-law. Basically, I am just giving examples. It can include everyone, provided they are dependent on you. A spouse, children's spouse, parents, they are anyway covered whether they are dependent or not. Yes? Is that clear, Sarvana? Now, why I am stressing so much on this definition once again, because in the point which we are discussing, medical facility, in the point which we have discussed right now, medical facility, this definition of member of household is not applicable. Definition of member of household is not applicable. Throughout my explanation in this medical facility, you might have, I do not know whether you have observed or not, I have not used the word member of household even once. I have always used medical facility for employee and his family members. So we have a separate definition of family. We have a separate definition of family. Definition of member of household is different. Definition of family member is different. Definition of family member is applicable only in case of two perquisites. It is applicable only in case of two perquisites. One is medical facility, the other one is leave travel concession, which we are going to discuss just after this. So, I want to understand that there is a difference between the definition of member of household and family member. Definition of member of household is much wider in scope, whereas the definition of family member is comparatively narrower in scope. So we should make point by point comparison to understand these two definitions. We should make point by point comparison to analyze who all are not covered by the definition of family member and they were covered by the definition of member of household. Are you understanding? See this definition of family. Family means number 1 spouse, dependent or independent, any spouse. Number 2 children, dependent or independent, any children. Number 3 says parents, brothers and sisters who are mainly dependent on individual. So here parents, brothers and sisters are also covered. They are covered provided they are dependent on individual. They are dependent on individual. Now, if you try to compare these two definitions, let us have a small comparison, distinction between these two definitions. Number 1 is definition of member of household. Versus definition of family member. First of all, member of household will include number 1 spouse. Spouse is covered by member of household definition also, and spouse is covered by the definition of family member also. Definitely spouse should be covered, otherwise how you will make the family? So spouse is covered in both the definition irrespective of whether spouse is dependent or independent. Number 2, children. Children they are covered by the definition of member of household. They are also covered by the definition of family member. Number 3, this you can write if you want. This you can write. This is the analysis. Children's spouse is covered by the definition of member of household. But children's spouse is not covered in the definition of family member. Children's spouse is not covered in the definition of family member. Number 4, parents are covered in the definition of family member irrespective of whether they are dependent or independent. D means dependent, ID means independent. So dependent, independent parents both are covered by the definition of member of household. Parents are also covered by definition of family member provided they are dependent. In other words, if they are independent, they are not covered. If they are dependent, they are covered. If they are independent, they are not covered. Yes? Is that very, very clear? Have you understood till now? See, we are just doing the comparison, that's all. Why we are doing the comparison now? It is very important. First of all, I will do the comparison and then I will tell you what kind of question can be drafted on this, and if such kind of question is drafted, 60-70% students can go wrong. They will give the wrong answer. So to understand, first of all, we should understand what is the difference in the definition. So this is fourth point. Point number 5. Member of household include servants. But servants are not covered in the definition of family member. Servants are not covered in the definition of family member. Point 6. Member of household includes other dependents. Other dependents. Other dependents can be brother, sister, grandparents, paternal, grandparents, maternal, father-in-law, mother-in-law, or any other person. Any other person. But here in the definition of family member, only 2 dependents are covered. In fact, 3 dependents are covered, but we have covered parents here in point number 4 itself. So, which dependents are covered here? Brother and sister. Brother and sister, that's all. See, now you may think, what difference does it make? Definition is definition. No. Lot of difference. It will make lot of difference. What examiner will do? Examiner will intentionally create a question wherein he would say that medical facilities given to father-in-law of an employee. Medical facilities provided to employees' father-in-law, employees' mother-in-law, employees' grandparents, employees' brother, employees' sister, etc. But all these people, they are not covered by the definition of family member. And since they are not covered by the definition of family member, if at all facilities provided to these people, that will become fully taxable. That will become fully taxable. Even if it is provided in government hospital, employer's hospital, hospital approved by CCIT, whatever it is going to become fully taxed. It will be fully taxed. This is the most important point. So your examiner will intentionally create a question wherein he will say that medical facility is provided in the hospital maintained by employer. To whom? To employees, independent brother, independent sister, father-in-law, mother-in-law. So he is going to pick up those people who are covered by the definition of member of household, but who are not covered by the definition of family member. And intentionally, on those people he will be asking the question. So you will feel that no, these people are covered now, because what is there in your mind is the definition of member of household. But for medical facility, what is important is definition of family member and not the definition of member of household. Examiner should not take the undue advantage. If you don't have in mind the clear distinction between this member of household and family member, then you are gone. Even after giving the wrong answer, you will never realize that you have given the wrong answer. Such kind of questions are drafted by the examiner. See, if you ask any of your friends who have already appeared for CA intermediate now, once they have appeared for the examination, most of them will say, no, my paper was good. But they did not clear the examination. The reason is they have given wrong answers, but even after giving the wrong answers, they haven't realized that their answers were wrong. Because examiners would create questions based on such kind of confusion, such kind of points which will have a lot of confusion. Or examiner also knows where the students are strong enough and which are the points which they might be having some confusion, or they might have forgotten those points. On those points, they would be specifically drafting the questions to ensure that 60-70% students should go wrong at that places. This comparison, if you refer day before examination, then definitely you are not going to make any mistake in the examination. Dikshit says what, sir, explain notes 3 point. But have you understood this? First of all, tell me, have you understood this? Yes? If you want, you can take the photograph. Shall I proceed? So here you can write, here, if you want, you can write, refer, comparison of member of household versus family member definition. This point you have to refer day before examination. You can mark this as very, very important point. So with this, our medical facility story is over. Now Dikshit wanted me to explain point number 3. Dikshit, this point number 3 note now. It says what? If employer has taken out accidental insurance for your benefit, he has taken an accidental insurance. See, there is something called as life insurance, there is something called as health insurance, and there is also something called as accidental insurance. Accidental insurance. If you suffer through some accident, you are not dead, you are alive, but you have suffered through an accident, then in that accidental policy, entire cost will be covered. Or you died because of accident, then also will be compensated, your family will be compensated. So that personal accident policy is taken by your employer on you. Whatever premium he pays now will be totally exempt from tax. Will be totally exempt from tax. So life insurance premium paid is totally taxable, health insurance premium paid is totally exempt, and accidental insurance policy premium paid is also totally exempt from tax. Yes, Dikshit, is it clear? Let's move on to question number 13. Question number 13 is only on medical facility. Is only on medical facility. See, I am repeatedly telling you, don't refer the notes from ICI module. Theory notes now, you should not refer to ICI module even if you have time. You have a lot of other subjects also to prepare. Taxation is too vast. Taxation is too vast. If you refer this notes as well as module, it is going to consume huge amount of time. Only for practice purpose, you can refer the practical questions from the ICI module. That's all. Theory, you should refer from this notes only. And this notes now, it is having excellent quality of problems. For every separate concept, I have made a separate question. Question number 13. Compute the taxable value of perquisite in respect of medical facility availed by Mr. X from his employer in the following situations. So we have three situations. Let me tell you, these 3 points of 3 situations are totally independent from each other. So, while you give the answer for point number B, you should not think about point number A. Point number A, B and C are independent. Point number A says, employer pays a insurance premium of 3,000 under the health insurance scheme on the health of X. What is the treatment of this point number A? Health insurance premium paid by employer on the health of employee. Yes, this is totally exempt from tax. Totally exempt from tax. So point number A is over. Next is point number B. Expenses on cancer treatment of married daughter of X at Tata Memorial Hospital, Mumbai, an approved hospital for this purpose, and the cost paid by employer was 50,000. See how the examiners really drafted this sentence to ensure that you make a mistake. See what word he has used. Married daughter. This married daughter word will force you to think whether this married daughter will be part of family member or not. But the answer is definitely it is part of family member. Children are part of family member, whether they are married, whether they are unmarried, whether they are minor, whether they are major, whether they are dependent, whether they are independent. Every child is covered by the definition of family member. So even if the daughter gets married, thereafter also she will be covered by the definition of family member of father. So this facility is totally exempt from tax. So medical treatment cost in a hospital which is approved by Chief Commissioner of Income Tax is exempt from tax, totally exempt from tax, irrespective of the amount. So point A and B is over. Now we move on to point C. Following expenses on the treatment of X's major son. X is an employee. His major son is suffering from some disease. Treatment is being given to him outside India. So some costs were incurred outside India and all these costs were paid by employer. All these costs were paid by employer. First point is actual medical expenses. Actual medical expenses is 75,000, but the expenses permitted by RBI is 60,000. So what will become taxable here? Yes, 15,000 will become taxable. So point number 1, I can write 15,000 is taxable. Point number 1, 15,000 is taxable. Is that very, very clear? Yes. So point number 1 is over. Now we move on to point number 2. Point number 2 says expenses on stay abroad of excess son and brother who accompanied the patient. You know that stay cost of patient plus one attendant is exempt up to amount approved by RBI. Excess is taxable. So what is the amount approved by RBI? It is 45. What is the expense incurred by employer? 65. So what is taxable? Is 20. 20,000 is taxable. So total till now, how much is taxable? 35,000 is taxable total till now. Till now, 35,000 is taxable. Now point number 3 says, traveling expense of excess son and brother, 1,20,000. Since traveling expenses, amount approved by RBI will not be given. That point is not applicable in traveling expenses. What is applicable in traveling expenses? Whether it is taxable or not, it is decided based on what? Is decided based on gross total income. So you have to calculate gross total income excluding this traveling cost. You should not take into account this traveling cost of 1,20,000 and you should calculate the gross total income. Now further it says, assume that the other income of X is case 1, 1,50,000, case 2, 1,80,000. See now what they have given now? They have created two situations. They have created two situations. In the first situation, they are telling you that other income. Other income means other than salary. Other income is other than salary. Other than salary, his income is 1,50,000 in first case. And second case, other than salary, his other income is 1,80,000. Why these two situations are created? Because the examiner wants you to calculate the amount of gross total income to decide the taxability of traveling allowance. So, this other income, first situation, situation 1, other income. What is the amount of other income? 1,50,000. To this, you should add two things. Number 1, medical expenses taxable, 15,000. Stay cost taxable, 20,000. Medical expenses taxable amount, 15,000. And stay cost taxable, 20,000. This will give you how much? 185. 185. This is your gross total income. Excluding travel cost. This is your gross total income excluding travel cost. Yes, is that clear? Since gross total income excluding travel cost is less than equal to 2 lakhs, your travel cost won't be taxable. So, travel cost will be exempt. So, what is taxable total is 185 only. This is the first situation. Have you understood this very clearly? Let's move on to second situation then. Other income is how much in second situation? 1,80,000. Medical expenses is how much? Taxable amount? 15,000. Stay cost taxable amount? 20,000. Your GTI excluding travel cost is how much? 2,15,000. Yes or no? So what is the treatment of travel cost? travel cost will become taxable. Travel cost will be taxable. So to this I should add what? Travel cost. What is the amount of travel cost? 1,20,000. 1,20,000 is the amount of travel cost. So what is the taxable amount? 3,35,000. 3,35,000. Yes. Have you all understood this very clearly? See, salary chapter, at the end of the chapter, solution is provided for most of the questions. And wherever it is not provided, now I'll provide you. I'll provide you. So don't worry about the solutions. All the solution, each and every question, whether we are discussing, whether you are doing as a part of homework, whether the solution is given in the textbook, not given in the textbook, you will be provided with PDF solution for all the chapters. For all the chapters. So this question number 13 is over. So till now we have completed how many points? We have completed transport facility, we have completed medical facility. We started at around 2:35. No, 2 o'clock, 2:05. So it's around 1.5 hours. We have completed 2 points. Medical facility took a lot of time because we discussed in very much detail. Because on this, examiner had asked an exclusive question of 8 marks. So anything can happen. So we are left with now 3 points: leave travel concession, motor car facility, and relief under section 89. See, day by day time is more difficult. We are having difficult times day by day. CA Institute has cancelled the intermediate and final examination, and the new dates are yet to be announced. I do not know, but it appears that CA Institute this time also will not be in a position to take the examination. God knows what is going to happen. Every day more than 350,000 cases are coming in the entire country, and people are dying like anything. Lot of people have died. Yesterday, one of the very prominent news channel anchor died yesterday because of COVID. He was suffering, he was infected 1 week before. Yesterday he died. Today, one of the actor died. He was an ex-army officer. After taking VRS from army, he worked in film industry for around 5 to 7 years. You are not watching Hindi movies, na? Hindi movies, he has worked in a lot of Hindi movies. So he died yesterday. And their age was around, that television anchor, his age was only 40 or 41 years. And that, yes, 3,578 deaths, 4,01,000 total cases. So, if this situation continues for 1 month, then you can't imagine what will happen after 1 month. A very dangerous situation. 4 lakh cases a day means in 1 month's time there might be 1 crore cases. 1 crore cases. Situation will become worse day by day if the state governments are not active. So I strongly believe that what can happen in next 15 days? Now, if this continues, once again entire country will have to go into a lockdown. Government will be forced to go for a lockdown. There will not be any option left. If this number of cases continue around 3.5 to 4 lakhs, in a span of maximum 1 month, we'll have to go for a lockdown. God knows what is going to happen. But please take care, stay in home, stay indoors, don't go out unnecessarily. And in Chennai, I have specifically observed uh, last time Omkar sir came to teach you economics, na? So I asked him whether people in Chennai are wearing mask or not. So I came to know that people are not serious enough in Chennai with respect to wearing mask. But the moment when I came to Chennai, when I came out of the airport, I saw more than 50-60% people were already wearing the mask. But still, a lot of people are not wearing the mask. If we don't wear mask, if we don't take precautions, now what government can do? Government cannot do anything. And even if you have money, now you can't do anything because money will not buy you oxygen. Money will not buy you a bed in the hospital. Money cannot buy health. Once you suffer from a particular disease, now money cannot do anything. It is just a piece of paper. So the best approach right now is to take precautions. That's all. Prevention is better than cure. That is what is the idiom. We have to follow very strictly throughout the country. But you see a lot of marketplaces, people are going without mask. Why this second wave has come now? Only because of people. Government cannot do anything. It is very easy to blame any government, either the central government or the state government. I strongly believe that in such situations, people should be more responsible than the governments. What government can do? Government will arrange an oxygen for you. Government will arrange a hospital bed for you also. But if you are infected to a very greater extent now, even with the help of all medical facilities now, it will be very difficult to save your life. So, point is, people should be taking a lot of precautions. Whatever doctors are suggesting, wear the mask wherever you go, wash your hands, all these things should be done. People in India are practically careless. Foreign countries, they are more people are more aware. They are more aware about the situation. They don't take things for granted. In India, people take things for granted. I do not know. May God only save us. Why it is proviso to section 17.2? Dikshit, where it is written? 17.2 is a perquisite. 17.2 is a perquisite, and below 17.2, na, there are a lot of cases given which are exempt from tax. Which are exempt from tax. So this medical facility, basically it is given in proviso to section 17.2. See, the taxability situations are given in section and exemption situations are given in proviso. Proviso to section 17.2. Yes. So this medical facility, na, exempt part is covered by proviso to section 17 subsection. Exempt part is covered by proviso to section 17 subsection 2. See, for teaching na, we simplify a lot of things for you. And sometimes we oversimplify. So when you pick up the bare act, na, you find difficulties in understanding the provisions. Definitely bare act, it is very difficult to understand. The language would be very much legal. At a first glance, we will not understand a lot of things. Anyway, shall we proceed? We move on to next point, leave travel concession. Leave travel concession. This is also one of the important point. If I remember correctly, we can have a break after completing this point, we'll have a break. This point is slightly bigger one. But what is left is motor car facility. That is bigger than this. So what we can do, we can complete this. Leave travel concession. Then we can have a break. And after the break, we'll be left with 2 points. See, this leave travel concession is section 10 clause 5. It is section 10 clause 5. Section 10 clause 5 is section relating to exemption. and this section 10 clause 5 should be read with rule to be. So this leave travel concession provision which I am discussing with you now, that is covered by section 10 clause 5, it is an exemption section, it is not a taxability section. So this section along with rule to be will help you to ascertain the amount of exemption. And after deducting exemption, if something is left, that amount will become taxable to you. That amount will become taxable. See, what is this? The concept is leave travel concession or leave travel assistance. Don't misunderstand it as leave travel allowance. It is not allowance. Allowance means fixed amount of money given by employer to employee. This is not an allowance. This is a assistance or it is a concession. Do you know, I do not know, I am talking about a year back, medical facility to non-specified employee or any other private hospital in India, is it taxable or not? Rizwan has asked me a very important question. He says, sir, medical facility to non-specified employee. And if the hospital is any other private hospital in India, is it taxable or not? Rizwan, generally what would happen now? Generally what would happen, if you are admitted to a private hospital, either the employer will pay your bill directly to the hospital or you will pay the bill and your employer will reimburse the bill. In that case, now, it should be covered by section 17 subsection 2 clause 4. And the moment it is covered by 17 to clause 4, it should be taxable to every employee. It should be taxable to every employee. And leaving aside this payment, direct payment by employer or reimbursement by employer, all other part of the medical facility is taxable for specified. Is taxable for specified, not taxable for non-specified. But I have already explained you, because of third point, practically everyone has become a specified employee. Yes, Rizwan, is that very clear? Now listen to me very carefully. See, in Mumbai city is long. Mumbai city is long. It is not a circle city. So it is a very long city. People travel by train. Students travel by train even to go to college. Here also this might happen. Na? You might be staying at one place and our college is at another place. So you have to travel by train. You have to travel by local train. So you might be aware that if you are a student or you are a senior citizen, either you are a student or you are a senior citizen, then Indian Railways is offering you 50% concession in the ticket fare. Are you aware about that? Yes or no? If you are a senior citizen, the ticket fare is less na in case of Indian Railways. You are not aware? In case of senior citizen, the ticket fare is less. It is around 40% less as compared to the normal fare. But you have to provide your Aadhaar card or PAN card to prove your age. Ticket fare is less by 50%. So normal cases, na ticket fare, say from Chennai to Mumbai, if you want to go from Chennai to Mumbai, the train ticket third AC fare would be around say 2,300 for example. Then for a senior citizen, it would be only 1,200. It would be around 50% discount to the senior citizen. Plus, even in local trains, the students who are traveling through train, they get 50% concession. You take that monthly pass, season pass it is called as. So, from the college, you have to take the bona fide certificate saying that he is studying in so and so standard, and you have to also take one form from the railways, and you have to fill up the form from which location to which location will be traveling. All these things you have to fill up, and you have to get it stamped from your college. And if you submit that form at the counter, then the railways would charge you only 50% of the fare. I do not know whether you are aware or not, but this facility is available. That is called as concession. That is called as concession, or that is called as assistance. Assistance means help. See, in olden days, you talk about anything before 35, 40 years, maybe 45, 50 years, there was no television. Before 45, 50 years, no television, no YouTube, no Facebook, no internet, nothing. Right now, if you are studying for entire day and if you feel bored, what do? You go through YouTube videos, you will chat, you will surf the net. You have a lot of things to entertain yourself. But in those olden days, what people used to do once in a year, they used to go to the native place. For example, you are here in Chennai, your native place is some other village in Tamil Nadu only. So during your vacation period, school vacation period, March and April, people will go to their native place. So once in a year, employer will say to employee that along with your family, you go to your native place, stay there for few days and come back. So that if the place changes, you will get refreshed. When you come back, you will be fresh. So whatever cost you incur for your train fare, etc., half of the cost I will bear it for you. So in olden days, employer used to bear some portion of the cost of traveling for the employee to their native places. And to exempt such facility, government had come out with section 10 clause 5. But you cannot say which one is the native place for which person. You can't say that a Gujarati person will have a native place in Gujarat only, or a Marwadi person will have a native place in Rajasthan only. You can't conclude in that manner. So nowadays, this section is utilized for even vacations. So if an employee is working in some multinational company and he is going on a vacation to Ooty along with his family, then also this section 10 clause 5 is utilized for the purpose of claiming exemption. But when section was introduced, the intention was employee is going to his native place once in a year, whatever cost employer is bearing, we will provide certain exemption in that. Slowly, people started claiming exemption for their vacations also. So as of now, if you are going on a vacation along with your family members to any place, and if employer is bearing certain cost for that, then you can claim exemption for that amount in section 10 clause 5. But in section 10 clause 5, we have certain set of rules for ascertaining the amount of exemption. So this section is giving you exemption, and you are traveling to any place in India, either it is your native place or you are traveling for a vacation, and some portion of your travel cost, some portion of your which cost? Only travel cost I am talking about. I am not talking about other cost like stay cost in a hotel, food cost during traveling or local traveling. I am talking only about the travel cost from the starting point of journey to ending point of journey. That will not include the local traveling by cab or auto rickshaw. That will not be included here. So let's move on to this section. Value of leave travel concession or assistance. Value of leave travel concession or assistance received by an individual from his employer or former employer for himself or his family in connection with proceeding on leave to any place in India, or to any place in India after retirement. So you are visiting to any place in India while you are in job or after you retire. So if you visit outside India, then exemption will not be available in section 10 clause 5. I told you now when section was introduced, the intention was to give exemption to those people who were visiting their native places. So you can't say that my native place is outside India. It is not possible. So government wants to promote the traveling within India only. So government says if you are going to any place in India along with your family members, either while you are in service or after you retire and your employer or former employer is compensating certain amount, he is helping you out to meet the cost, then that concession or that assistance, partially it will be exempt and partially it will be taxable. What is the amount taxable? Sorry, what is the amount exempt? That is what we will understand. This flow chart we'll understand later. Right now, first of all, we'll try to understand how many times you can claim exemption and what are the rules for claiming the exemption. So you are traveling to any place in India, either after retirement or while you are in service, an employer is bearing some amount of some portion of the cost of travel. In that case, you can claim exemption. What are the rules with respect to exemption? Important point number 1. This provision says you can claim exemption for 2 journeys. You can claim exemption for how many journeys? You can claim exemption for 2 journeys in a block of 4 calendar years starting from 1986. So you can claim exemption for how many journeys? 2 journeys performed in a block. Block means group. Block means group. Group of 4 calendar years. What do you mean by calendar years? Starting from January ending in December. Calendar year means January to December. So you can claim exemption in respect of 2 journeys performed in a block, in a group or of 4 calendar years starting from 1986. So I have made different blocks. Starting from 1986, I have made a bunch of 4 calendar years. So block 1 or group 1 from 1986 to 1989. This is the first block. Second block will be from 1990 to 1993. Third block is from 1994 to 1997. Fourth block is from 1998 to 2001. Fifth block is from 2002 to 5. Then it is from 2006 to 9, 10 to 13, 14 to 17, 18 to 21. What is your previous year? Your previous year is 2021, starting on 1st April, ending on 31st March. So that previous year falls into which block? It falls into block number 9. That is the reason I have stopped at block number 9. Na? Otherwise, I would have inserted one more line for block number 10 also. Now, before I move on to explain you this, tell me first, your block number 9 will start on which date, it will end on which date? Block number 9, na, what will be the starting date of this block and what will be the ending date of this block? Yes? It will be from 1st April 18 to 31st March 21, right? If you believe so, you are totally incorrect. I told you it is a block of 4 calendar years. 4 calendar years means starting in the month of January, ending in the month of December. So, this block number 9 is from 1st January 2018 and ending on 31st December 2021. Ending on 31st December 21. Is that very clear in your mind? Yes? Okay. This block of 4 years are uniform for all employees. You are not supposed to decide the group of 4 blocks. Sorry, group of 4 years. Block of 4 years. Government has not given liberty to you to decide. Government has already decided. It is same for everyone. So now I am going to explain you situation. Different situation I will be explaining you. See what it says, what the provision says. You can claim exemption for how many journeys? You can claim exemption for 2 journeys. You can claim exemption for 2 journeys. Now what is your block number 8? Block number 8 is 14 to 17. Block number 8 is 14 to 17. Say for example, this is your block number 8, 2014 to 2017. In this block, you are eligible to claim exemption for how many journeys? You are eligible to claim exemption for how many journeys? 2 journeys. 2 journeys, correct? Now, say for example, I am giving you one more column. Let me write here. Block number 8 is from 2014 to 2018. 2017. Exemption eligible. I am writing what? Exemption eligible. Exemption availed. Exemption availed means what? Exemption availed means utilized. Balance. Balance. Now, for example, you are eligible to claim exemption for 2 journeys, correct? You are eligible to claim exemption for 2 journeys. But you claimed exemption only for 1 journey. Because you went for a vacation or you went to your native place only once. You went to your native place only once. So your employer might have assisted or your employer might have provided you concession how many times? Only once. So you have claimed exemption for 1 journey. What is the balance journey left? Balance is 1 journey. This is left now. This is your closing balance. Closing balance. Now your block number 8 has ended. Your block number 8 has ended. Now next block is block number 9. Block number 9 is from 2018, 19, 20, 21. My question to you is, can you carry forward this balance journey to the next block? Can you say that please allow me to carry forward this 1 journey to the next block? Will that be allowed? Government says yes. This carry forward is allowed. So here there will be a brought forward 1 journey. There will be a brought forward 1 journey. And in this block, block number 9, you will get how many more journeys? 2 more journeys, correct? Yes or no? Are you understanding? So what is the total journey you are eligible to claim exemption for in this block? 3 journeys. Now the point is, if you perform any journey in this block number 9, this brought forward journey, this brought forward journey should be compulsorily utilized. in the first year of next block. What is the first year of next block? What is the first year of block number 9? 2018. So this journey, which is a brought forward journey, is required to be utilized in the first year of next block. If you could not utilize in this 2018, then on 31st December 18, this will lapse. On 31st December 18, this will lapse. Have you understood this very clearly? Yes or no? Okay. Now say for example, 2000, Deva, listen to me carefully. The previous block, you were eligible to claim exemption for how many journeys? 2 journeys. But you actually claimed exemption only for 1 journey. Correct? So what is the balance journey left at the end of the block? 1 journey. Can you carry forward that journey from the current block to the next block? Yes, you can carry forward. So what you have done? 1 journey is transferred from block number 8 to block number 9. See, it is like the way you close the ledger account, carried down, carried forward, brought forward. Similar to that, the closing balance of block number 8 can be taken as opening balance of block number 9. So 1 journey you have carried forwarded from block number 8 to block number 9. So that would become a brought forward journey. And in block number 9, you are eligible to claim exemption for 2 more journeys. So total, you can claim exemption for how many journeys in this block? You can claim exemption for 3 journeys. You can claim exemption for 3 journeys in block number 9. But whatever is the brought forward journey from the previous block, brought forward journey from the previous block is compulsorily required to be utilized in the first year of this block. What is the first year of this block? First year of this block is 2018. So whatever is your brought forward journey is required to be utilized in 2018. What if you don't utilize up to 31st December 18? Then that brought forward journey will lapse. If that brought forward journey lapses, then you will be left with 2 journeys. Right now you are having balance of 3 journey up to 31st December 18. If you don't utilize 1 journey benefit exemption benefit, then out of 3, the brought forward journey will automatically lapse, and then you will be left with only 2 journeys. Have you understood this very clearly? Now let me tell you that you have utilized 1 journey. 2018, 1 journey utilized. So how many journeys you are left with now? You have performed only 1 journey in block 9. So you are left with how many journeys? You are left with 2 journeys, correct? Now what will be your next block? Next block will be block number 10. Block number 10 will be from 2022 to 2025. Now my point is, can you carry forward these 2 journeys? Government says no. Government says no, you can't carry forward 2 journeys. Government says at any point of time we will allow you to carry forward only 1 journey from this block to the next block. So if you are left with 2 journey, 1 journey you can carry forward. 1 journey will lapse. 1 journey you can carry forward and 1 journey will lapse. Yes, have you understood this very clearly? This you can take the photograph if you want. You can take the screenshot. So here you will have brought forward one journey. This brought forward journey is which one? This one. So whatever I have explained you by taking an example, now I am telling you that in normal language. SSC can claim exemption twice in a block of 4 calendar years starting from 1986. SSC can claim exemption twice in a block of 4 calendar years starting from 1986. If he has not claimed exemption twice in a block of 4 calendar years, then the journey which is remaining unutilized, he can carry forward to the next block. But maximum only one journey can be carried forwarded from the current block to next block. And the journey which is carried forwarded from the current block to the next block is compulsorily required to be utilized in the first year of next block. If it is not utilized in first year of next block, it will lapse. See, this I told you in very simple language, but if you refer to the notes, the language is slightly complicated. So page number 62, now we have completed page number 62. Whatever I have explained you right now is called as carryover concession. It's called as what? Carryover concession. I am just reading the language for you. Where an individual does not avail such leave travel concession or assistance during any such block of 4 calendar years. Means you have not taken the benefit. The value of travel concession or assistance first availed in during the first calendar year of immediately succeeding block. Whatever journey you perform in the first calendar year of next block will be adjusted against the current year's journey. So they are explaining you in a reverse order. I have explained you in a ascending order. They are explaining you in a descending order. So first journey availed during the first calendar year of the immediately succeeding block of 4 calendar years shall be eligible for exemption in lieu of, in place of exemption not availed in the earlier block. This exemption shall be in addition to the exemption that will be available in respect of 2 journeys for that succeeding block. Therefore, only one trip can be carried forwarded to be availed in the immediately succeeding block. This rule is called as carryover concession. So let me first of all quickly revise whatever we have discussed till now in this leave travel concession in 2 minutes time, and then we'll discuss the remaining part of the provision. Section 10 clause 5 as well as rule 2b, they are related to exemption. It says that if you are traveling to any place in India while you are in service or after you retire, along with your family members if you are traveling, and the cost of travel is not entirely borne by employer, but he has helped you to bear the cost of travel. Portion of the cost is borne by the employer. In other words, he has given you some concession, he has assisted you. In that case, you can claim exemption in section 10 clause 5. This exemption can be claimed twice in a block of 4 calendar years starting from 1986. Starting from 1986, you can claim exemption twice in a block, in a group of 4 calendar years. If you have not utilized any journey, if you have not claimed any exemption in that particular calendar year, then the balanced journey you can carry forward from the current block to the next block. However, only one journey can be carried forwarded from current block to the next block. If you are left with 2 journeys at the end of the block, then one will automatically lapse and one can be carried forwarded. The journey which is carried forwarded to the next block is compulsorily required to be utilized in the first year of the next block, and if you don't utilize in the first year of next block, then that journey will also lapse. This provision is called as carry over concession. This provision is called as what? It is called as carry over concession. Now we need to understand two things. Number one, what is quantum of exemption? What is quantum of exemption means? How much exemption employee will be entitled to claim? How much exemption employee will be entitled to claim? See, everywhere in allowances also, perquisites also there was some exemption. And exemption is always lower of certain amounts. In allowances, in partly taxable, partly exempt category, the exemption was lower of amount received and amount spent. Whereas in second category, category B, exemption was lower of amount received and amount specified. So generally, everywhere exemption is lower of certain amounts, and in that amount, one amount, the first one is always actual amount received. But here, you are not going to receive any amount from your employer. You will have some concession. Therefore, here, the rule of exemption is slightly different. The rule of exemption is slightly different. How much is exempt? Exemption is lower of amount spent and amount specified. Exemption is lower of number one, amount spent. How much amount you have spent? And number two, amount specified. Amount specified means government has made rules for calculating the amount specified. See, for children education allowance, amount specified was 100 rupees per month per child, maximum 2 children. Hostel expenditure allowance, amount specified was 300 per month per child, maximum 2 children. For gratuity, amount specified was 20 lakhs. For leave salary, amount specified was 3 lakhs. For commuted pension, amount specified was 1/3 or 1/2 of total commuted value. Retrenchment compensation, VRS compensation, amount specified was 5 lakhs. Similarly, here, exemption is lower of amount spent and amount specified. Amount received is not there here. There are two amounts, number one, amount spent, and number two, amount specified. But here, in amount specified, they have not specified the amount itself. For calculating the amount specified, they have made the rules. For calculating the amount specified, they have made the rules. Why so now? Because your native place can be any part in India, any place in India. Na? For going to any place, the travel cost will not be same. Travel cost will depend upon the journey. If your journey is 1000 kilometers, travel cost will be different. If your journey is 200 kilometers, travel cost will be different. So, government says that in this, we are not giving you amount specified. Government says we are not giving you the amount specified. We are making a certain set of rules. You follow that rules and you yourself calculate the amount specified. Then you compare the amount spent with amount specified. Whichever is lower, you take it as exemption. So, with the help of this flow chart, we are going to understand what is the quantum of exemption. Exemption, you know, it is lower of amount spent and amount specified. It is lower of amount spent and amount specified. But how to calculate exemption? Quantum of exemption depends upon a lot of factors. The first question which you should ask to yourself is, how you have performed your journey? First question which you should ask for the purpose of computation of exemption is, how you have performed your journey. If you have performed your journey by air, then you have to take economy class fare. You have to take economy class airfare. See, in flight there is business class also. So you can't calculate the exemption by business class. You have to calculate the exemption by economy class. So you take economy class fare of national carrier. National carrier means you have to take the fare of Air India, and you have to take the fare for shortest route. You have to take the fare for shortest possible route. What do you mean by shortest route? Now, say for example, a person is situated in Mumbai and he is going to UP. So he should directly purchase the ticket from Mumbai to UP na. Instead of that, what he has done na, from Mumbai he is traveling to Tirupati. He is traveling to Tirupati, from Tirupati he is going to UP. So government says direct flights are available from Mumbai to UP na. So this Mumbai to UP will be considered as shortest possible route. You may travel from Mumbai to Tirupati, from Tirupati you may travel to UP. We don't have any objection. Let your employer spend money. We don't have any objection. But while calculating exemption, if direct flights are available, we would take the airfare of the direct flights only. This will be called as a shortest possible route. So wherever direct flights are available, exemption will be calculated, take into account the shortest possible route. So you calculate, you find out what is the economy class fare of national carrier, take into account shortest possible route. That will become your amount specified, that you compare with amount spent. And then you select whichever is lower. The amount whichever is lower na will be considered as the amount of exemption. Whatever lower amount is there, that lower amount will be considered as the amount of exemption. Yes, have you understood this left hand side? Yes or no? So first question which you will ask to yourself for calculation of exemption with respect to leave travel concession is how you have performed the journey. How you have performed the journey. Or maybe it's a different question. Have you performed your journey by airlines? Have you performed your journey by airlines? If yes, go to left hand side of the flowchart. If you have performed a journey by any other mode of transportation other than airlines, then you move on to right hand side. Journey performed by any other mode of transportation. If the journey is performed by air, move on to left hand side. Journey is performed by any other mode. Any other mode can be you have performed a journey by railways, or you went to that place in your own vehicle, or you went to that place maybe in a ship or a boat. Whatever it is, we are not concerned with that. The only question which we would ask to you is, have you performed your journey by air? If yes, move on to left hand side. If no, then you move on to right hand side. If you move on to right hand side, we will ask you a question whether the starting point of journey, in our example, starting point of journey is Mumbai and the ending point of journey is UP. If you have performed a journey by any mode of transportation other than airways, in that case we would ask you a question whether the starting point of journey and ending point of journey, are they connected by the railway network? Whether the trains are going at that destination or not. If you say that yes, place of origin and place of destination. Place of origin means starting point of journey and place of destination means ending point of journey. This place of origin and place of destination is connected by rail. If it is connected by rail. Place of origin and destination is connected by rail. In that case, whether you have performed your journey by rail or whether you have performed your journey by bus or any other mode of transportation, that is not to be taken into account. If Indian Railways is going to that destination, your starting point of journey and ending point of journey is connected by rail now, then you should take first class AC fare. The first class AC fare is the highest class. The top class in Indian Railways is first class AC fare. First class AC fare by shortest route. Here you don't say national carrier because there is only one carrier. There are no private trains. So you take first class AC fare of shortest route, compare that with the amount spent, select whichever is lower, that will become the amount of exemption. That will become the amount of exemption. Yes, have you understood this? So first question you will ask to yourself is, have you performed your journey by air? If yes, go on to the left hand side. If no, move on to the right hand side. Once you move on to right hand side, we would ask you a second question, whether starting point of journey and ending point of journey, are they connected or are they connected to the rail network? If yes, you move on to the left hand side. If no, then you move on to extreme right hand side. Place of origin and place of destination, they are not connected by rail. They are not connected by rail. In that case, the next question which we would be asking you is whether the recognized public transport system exists. Means whether the starting point of journey and ending point of journey, are they connected by road network? Means whether the buses are going there or not. If the buses are going at that location, then you take first class deluxe fare. Then you take first class. In bus, there is something called as first class deluxe fare. As of now, there are Volvo buses. Before that, there was something called as first class deluxe fare. Means sitting chairs will be cushioned chair, and you will be having a fan or AC. So that is called as first class deluxe fare. By shortest route, that you compare with the amount spent and you select whichever is lower. That will become the amount of exemption. That will become the amount of exemption. Now, if your starting point of journey is neither connected by rail, nor it is connected by road network, in other words, public transport system also is not available. In that case, how you have performed your journey is not of any relevance. You might have performed your journey by any mode of transportation. But we know that Indian Railways is not going to that destination directly, and direct buses are also not available for that location. In that case, we say that public transport system do not exist. Neither there is a rail network nor there is a bus network. In that case, what you have to do now? You have to find out what is the number of kilometers of the journey. You find out what is the starting point of journey. You find out what is the ending point of journey, and from starting point of journey to ending point of journey, you find out what is the number of kilometers. For that same number of kilometers, you take railway fare, first class AC fare. See, in Indian Railways, whether you travel 500 kilometers on the north side or whether you travel 500 kilometers on the south side, your fare is going to remain the same because fare is based on number of kilometers. So if your starting point of journey and ending point of journey is not connected by the rail network and recognized public transport also do not exist, in that case you have to find out the distance between the starting point of journey and ending point of journey in number of kilometers, and for that same number of kilometers you take first class AC fare of Indian Railways, compare it with the amount spent and select whichever is lower. That would be the amount of exemption. So air condition first class AC fare by shortest route as if the journey has been performed by rail. The journey is actually not performed by rail. Assuming that it would have been performed by rail, that you find out the first class AC fare, compare it to the amount spent, then you select whichever is lower. That would be the amount of exemption. That would be the amount of exemption. Rizwan is asking me, sir, in case employer is a transporter, see Rizwan, there are two answers to this. Number one, whether benefit is given to you in the form of leave travel concession. Whether the benefit is given to you in the form of leave travel concession, then you come into this section 10 clause 5 for claiming exemption. Or you can go to the transportation facility point. You can go to this transportation facility point. You can value your perquisite according to this. Is that very clear? In case your employer is a transporter, you can ascertain the taxable value according to this only. Yes or no? Rizwan, have you understood? So you have to see whether the benefit offered by employer to you is in the nature of leave travel concession or not in the nature of leave travel concession. If it is in the nature of leave travel concession, you are traveling and employer is bearing some cost, or if employer is transporter, then you go to a specific point, specific rule will prevail over the general rule. Now we move on to the last part of our discussion with respect to this leave travel concession. We want the last part of our discussion with respect to leave travel concession. Listen to me very carefully. I have already told you to all the perquisite definition of member of household is applicable. But in this entire chapter, there are two perquisite in case of which instead of definition of member of household, definition of family member is applicable. Instead of definition of member of household, definition of family member is applicable. Which are those two perquisite? One is medical facility, the other one is leave travel concession. The other one is leave travel concession. So same definition of family which was there in that medical facility is also there in this leave travel concession. But one point there is a change. That is what we need to discuss here. See, family for the purpose of this provision means leave travel concession, means number one, spouse of an individual, number two, children of an individual, number three, parents, brothers and sisters of individual who are mainly dependent on individual. So, family will include number one, spouse, number two, children, irrespective of whether they are dependent or independent. And it will also include parents, brothers and sisters, provided they are dependent. Now, very important point to be noted here is, see, I have made an equation here. Family equals to spouse, children plus dependent, parent, brother and sister. Now, very important point to be noted here is, with respect to children, earlier there was no limit with respect to maximum number of children. Up to 1998, up to 1st October 1998, or more precisely I can say up to 30th September 98, up to 30th September 98, that is before 1st October 98, there was no maximum limit with respect to number of children. There was no maximum limit with respect to number of children. In other words, for example, Manoj is having 10 kids. All of them are born before 1st October 98. And Manoj is going on a vacation along with his entire family. And employer is bearing some portion of the cost. Can he claim exemption for all the children? Yes. All of them are born before 1st October 98. 1st October 98, before that, there was no maximum limit with respect to number of children for claiming exemption in section 10 clause 5. In children education allowance, you have maximum 2 children. In hostel expenditure allowance, you have maximum 2 children. In education facility, you don't have any limit with respect to maximum number of children. But in this leave travel concession, before 1st October 98, there was no limit with respect to maximum number of children. So here left hand side we have written children born before 1st October 98. There is no limit for maximum number of children. But limit of maximum 2 children was introduced with effect from 1st October 98. And this was not a retrospective amendment. This was a prospective amendment. This was a prospective amendment, means it was made applicable with effect from 1st October 98. So, children born on or after 1st October 98, there is a maximum limit of 2 children. So, if you are having 5 children which are born on or after 1st October 98, then you can claim exemption for maximum 2 children. Whatever leave travel concession or assistance is offered for remaining 3 children will become taxable to you. That will become taxable. Is that very, very clear? Yes or no? Okay. Now, see here I have taken an example to make you understand. This is not an exhaustive example. This is just an illustration to make you understand. First of all, here there are two cases. Make this as case 2. Now, by mistake, now both are appearing as case 1 only. The right hand side, you make it as case 2. Case 1 says, in the first attempt, Manoj had one child. Manoj means wife of Manoj. Had one child, single child, in the first attempt. The way you are going to appear in the examination for one group, you are not prepared for two groups. No, you appear for one group. Similarly, in the first attempt, Manoj had one child. In the second attempt, Manoj had two children. So there are total how many children? 3. This is one possibility. Another possibility, second case, in the first attempt itself, Manoj had 2 children. The second attempt he had 1. So total is 3. Mathematically 1 plus 2 is 3 and 2 plus 1 is also 3. But we are not in maths. We are not in maths. We are in tax. So the manner in which we look at these two cases is totally different. See, in first case, how we will count the child? Na? 1, 2, 3. In the second case, you will say 1, 2, 3. So it is different. That is what government is trying to explain you. So government says, in the first case, in the first attempt, you had only one child. What is the limit for number of children? 2, na? So one limit was exhausted. So you had a chance. So you proceeded and you had 2 children. So can you say that no, my limit is over, one of you should go back? It is not possible, na? So here government says in case 1, situation is not in your control. Situation is not in your control. In second attempt, God gave you 2 children, na? So government says situation is not in your control. We will offer you exemption for all the 3 children. We will offer you exemption for all the 3 children. But if you refer to the second case, in second case, in the first attempt itself, you had two children. So you know that limit of 2 is over for you. Limit of 2 is exhausted, you know. Then also you proceeded. Now then you proceed according to your risk. Government is not going to offer you any exemption for any child now. So in the second case, government is going to offer you exemption only for the first 2 children which were born in the first attempt. Have you understood? See, question is not how many children are born. Question is whether the situation is in your control or not. For example, Ishwar got married, lot of years he did not have any child. So he went to some temple and he prayed to God, see, 10 years I am trying, no children, please give me children. So next attempt, Ishwar's wife had 4 children at the same time, quadruplets, 4 children. Before that, he did not have any children. So 4 children. Now can you say, my limit is over? No. So 4 children, situation is not in his control. He can claim exemption for all the 4 children. Those multiple childs would be considered as single child. Vidya Shri is asking me, sir, whether that children include an adopted child? Answer is yes, it includes an adopted child. In the definition of, in Income Tax Act, we have a definition of child which says that child includes an adopted child. Child includes an adopted child. See, the moment you adopt a child, you should consider that that is your child only. Otherwise, there is no, the purpose, basic purpose of adoption will be defeated. Yes, is that very, very clear? Non-specified employee in non-monetary. Deva says only number of attempts is considered, not number of children. No. Number of children is also considered, na? The first attempt, someone is having 4 children, first attempt itself. So thereafter, if he proceeds further, he can't claim exemption. But first attempt he had 4 children, na? So he can claim exemption for all 4 of them. So you have to think whether the situation is in the control of person or not. If you already had 4 children in the first attempt itself, now you know now your limit of 2 is exhausted. So you should not proceed further. If you proceed further, then you will not get any exemption for the new child. The old 4 children, na, exemption is eligible. Is that clear? Yes or no? Rizwan is asking me a question. Non-specified employee in non-monetary. Taxable amounts are calculated in the same manner. Rizwan, the valuation rules are same for everything. Specified, non-specified, na? By referring to that concept of specified, non-specified employee, we just decide whether a perquisite is taxable or it is not taxable. The moment you decide it is taxable, na, valuation rules are same. There is no change. Valuation rules are 100% same. Yes? Shall I proceed to the practical question? Question number 14, very small question. Similar question was asked in 2015. 2015, 6 years back. This same question was asked. Same means 100% similar. I have just changed the names. It was asked for 5 marks in, if I recollect correctly, it was May 2015. This question was asked for 5 marks. It says Mr. Om went on a holiday on 25th December 2020 to Delhi with his wife and 3 children. One son, age 3 years. One son, age 3 years, and twin daughters, age 5 years. Now tell me, who has come in this world earlier? Twin daughters or one son? First attempt, he had a child or he had twin daughters? Sarvanna, you can't decide based on what is given first in the question. You have to see the age. Daughter's age is 5 years, na? Yes or no? So daughters might have born in the first attempt. So first attempt he had twin daughters, na? So his limit was exhausted, na? Still he proceeded further for a son. So for son he cannot claim the exemption. For son he cannot claim the exemption. They went by a flight economy class and the total cost of tickets reimbursed by the employer was 60,000. 45,000 for adults. The 45,000 for adults. Who are adults? Om and his wife. They are adults. And 15,000 for 3 minor children. This 45,000 will be totally exempt from tax. What about the 15,000? Out of 15,000, 15,000 is for 3 minor children, na? Exemption is available only for 2 daughters, not for the son. So out of 15,000, 10 would be exempted and 5 would be made taxable. Have you understood this very clearly? Compute the amount of LTC which is exempt. So how much total exemption out of 60,000? Out of 60,000, what is the total exemption? 55,000 is exempt and 5,000 is taxable. 55,000 is exempt and 5,000 is taxable. Is that very, very clear? Yes or no? Okay. Now read the second part of the question. It is having an alternate case for you. What would be your answer? A separate case. What would be your answer if the age of son is 5 years and the age of twin daughters is 3 years? If the age of son is 5 years, means who arrived in this world earlier? In the first attempt, who came in this world? Son came, na? Thereafter, limit of 2 children is not exhausted, na? So he has the right to proceed. So he proceeded. And then in second attempt, he had 2 daughters. So do you believe that situation was in his control? Definitely not. So in that case, he can claim exemption for all the 3 minor children. So what will be the amount of exemption in this case? Entire 60,000 will be exempted. Nothing is taxable. Yes. Is that very clear? $15,000 is exempt for son and daughter, 45,000 exempt for self and spouse. So total exemption is 60. Yes, is that very clear? Okay. So now we are left with how many points now? Motor car facility and relief under section 89. We are left with 2 points. One is motor car facility. See, motor car facility, this perquisite in the notes now I have provided you in two different manner. Number one, it is given to you in tabular form, and same thing is given in flowchart form also. The very big flowchart. Actually, I had a target of completing this salary chapter along with this motor car facility today, but I don't think that we'll be in a position to complete. So, I am not picking up this motor car facility today. If you get a chance, in any case, if you get a chance, then today you can refer this motor car facility as a homework. 1.5 page, you can refer this as a homework. Even if you don't understand, you should read it once. Even if you don't understand, you should read it once. See, when I give you something as homework, sometimes the intention is to make you understand that it is difficult to understand on your own. Sometimes the intention is to make you understand that it is difficult to understand on your own. Therefore, attending the lectures is very important. So, you can refer this motor car facility on your own. There are two advantages. Number one, you will come to know that it is difficult to understand. And number two, when we discuss in the classroom, you might have referred earlier. So, it will be easier for you to understand when we discuss. So, today I am skipping this. I am moving on to the last topic of the chapter. This tax on perquisites, this I will not discuss right now. Have I discussed this with you in the chapter of income from salary? Profits and gains of business profession? Have I discussed this with you in the chapter of profits and gains of business profession? Do you recollect? I don't recollect. Anyway, if we have not discussed, we will discuss. Don't worry. No, not discussed. So we will discuss. Right now, first of all, let's move on to relief under section 89. Question number 16, question number 17 is part of homework. Question number 18, 19, they are already discussed with you. Question number 18, 19 is nothing but the children education allowance per month per child, and in one of the case only per month. That is already discussed with you. Question number 18, 19. Employer paid tax on behalf of employee will be covered by 17 to clause 4. Obligation of employee met by employer. It will be added to employee's income under income from salaries because of 17 to clause 4. But I will discuss because if I remember correctly, that is not discussed in detail. So this question number 16, 17 is part of homework. Do it yourself. Do it yourself means solution is given in the textbook. You have to refer. If you have any doubts, you have to ask me. Now we have only one question to discuss, that is question number 15, and before that we need to discuss this relief under section 89. Now listen to me very carefully. I am going to take an example to make you understand what is this relief. Say for example, it is previous year 1920. Say for example, it is previous year 1920. Previous year 1920 your salary is 60,000 per month. 60,000 per month. You don't have any other income. You don't have any other income. So your total income will be 60,000 per month multiplied by 12 months. That is 7 lakh 20. You have filed your income tax return and you have declared an income of 7 lakh 20. Income tax return is filed. 7 lakh 20 is income declared. Previous year 1920 is over. Now comes the previous year 2021. Previous year 2021, on 1st May 2000. Do you know what is 1st May? 1st May? Yes. Today is which date? 1st May, na? 1st May is celebrated as what? Labor Day. It is celebrated as Labor Day. Actually, they should have celebrated as Article Assistant Day. Now, first day 2020, salary is increased from 60,000 per month to 60,000 per month to say 80,000 per month. And this salary is increased with retrospective effect from 1st April 2019. During the previous year 2021, on Labor Day, 1st May 2020, your salary is increased from 60,000 per month to 80,000 per month. That is okay. But this is not a prospective increase. This is a retrospective increase from the first day of, not the first day of current year, first day of last year. Are you understanding? Yes or no? So previous year 2021 income will be how much? Current year salary you will receive at what rate? 80,000 per month multiplied by 12 months. That is nothing but 9 lakh 60. And for last year you will receive some extra amount now. Because this is a retrospective increase, last year you might have received salary at what rate? 60,000. So that is also now increased to 80,000. So you are going to receive an extra amount of 25,000 per month for 12 months. So that 20,000 per month multiplied by 12 months is 2 lakh 40. So total is 12 lakhs. Can you tell me what is this 2 lakh 40,000? This 2 lakh 40 is what? Arrears of salary. Arrears of salary. Now listen to me carefully. See, this arrears of salary The provision says if it was not taxed in the earlier year, it will become taxable in the current year. And if the question is silent, we take the presumption, we take the assumption that it was not taxed in the earlier year, so it will become taxable in the current year. Now, a taxpayer may argue that if this 2,40,000 would have been received by me in the last year, if I add this 2,40,000 in the last year's income, I would be required to pay tax on this 2,40,000 at what rate? If I remove this 240 from here, actually this is not an income of 2021, it is an income of 1920 only. You had rendered services in 1920, so this 2,40,000 arrears of salary, for that you had taken the efforts. You have rendered the services in which year? 1920. So taxpayer is arguing that if this 2,40,000 would have been received in the last year, this 2,40,000, if this would have been added to my last year's salary income, at what rate this 2,40,000 would have been taxed? This 2,40,000 if I add to 6 lakhs, that would turn out to how much? Sorry, this 2,40,000 if I add to 7,20,000, not 6 lakhs, yeah, it is 60,000 per month. For 12 months, it is 720. If I add this 2,40,000 to 720, that will give me 960. So the point is, this 2,40,000 will be taxable at what rate? 20%? Yes or no? This 2,40,000, if it is added to the last year's income, it would be taxable at 20%. But in current year, what is happening? In current year, what is happening? Out of this 240, 2 lakh amount is falling beyond 10 lakhs. Now, beyond 10 lakh, the rate of tax is 30%. So, what is happening now? Out of 2,40,000, 2 lakhs is falling into 30% slab, and remaining 40,000 is falling into 20% slab. This 40,000, you will not have any objection. Even this 40,000 would have been received in the last year, you would have paid tax at 20%. Current year also you are paying tax at 20%. But this 30,000, you will have objection, because if this amount would have been received in the last year, you would have paid the tax at 20%. Right now you are paying tax at 30%. Are you understanding? Yes or no? So, on the same amount, if this would have been received in the last year, you would have paid a tax at 20%. In the current year, you are paying tax at 30%. So, there is an undue tax charged to you. There is a undue tax charged to you. You will face hardship. You are saying to the government, let me allow to revise my income tax return of the last year. I want to declare this income of 2,40,000 in the last year only, because actually this income belongs to the year 1920 only. But government says, we are not going to allow you to revise the income tax return of the last year. Instead of that, we will offer you relief in the current year. We will offer you what? We will offer you relief. Relief is nothing but a discount from the tax liability. This is similar to marginal relief. The calculation mechanism is different. Calculation mechanism is different, but relief is a discount from your tax liability, reduction from your tax liability. So government says, in case of advance salary, in case of arrears of salary, if you feel that in current year you are paying more tax as compared to the amount of tax which you would have paid in the last year, then you are eligible to claim relief under section 89. Yes? Now I am sharing with you some steps for calculation of relief. Step number 1, I am denoting this as S1. You calculate the tax liability for the last year. What do you mean by last year? In our example, 1920. You calculate the tax liability on the last year on the amount of income excluding arrears of salary. On the amount of income excluding arrears of salary. Means you calculate tax on what amount? 7 lakh 20. You calculate tax on 720. Yes or no? Tax on 720. Step number 2. Step number 2. Listen to me carefully. I don't want the tax amounts right now. I am just explaining you provision. I am just explaining you procedure, and then we'll move on to a practical question where you can solve. Step 2. You calculate the tax liability for the last year. What do you mean by last year? 1920. You calculate tax liability for the last year, that is 1920, including arrears of salary. Including arrears of salary. In other words, you have to calculate tax on what amount? 720 plus 240. 720 plus 240 means how much? 960. You calculate tax on 960. This will become your step number 2. This will become your step number 2. Then you calculate D1. What is D1? D1 is nothing but difference of step 1 and step 2. Definitely tax on step 2 will be higher as compared to tax in case of step 1. So D1 equals to S2 minus S1. D1 equals to S2 minus S1. Have you understood this much? Yes or no? This is the story of last year. Now we move on to S3. S3 is you calculate tax liability for the current year. Current year means which year? 2021. You calculate tax liability for the current year. Excluding arrears of salary. Excluding arrears of salary. So we are asking you to calculate tax on what amount? Tax on? Yes? Please answer. $960. We are asking you to calculate tax on $960. Correct? Then step 4, S4. You calculate tax liability for the current year, that is 2021. Including arrears of salary. You calculate tax liability for the current year 2021, including arrears of salary. So we are asking you to calculate tax on what? Yes, tax on 12 lakhs. Tax on 12 lakhs. Then you calculate D2. The way you calculated D1 similarly now you calculate D2. What is D2? D2 equals to what? You tell me now. How do you get D2? How you got D1? S2 minus S1. So what is D2? S4 minus S3. Now listen to me very carefully. D1 is what and D2 is what? If I ask you what is D1, what is D2? Don't tell me D1 is S2 minus S1 or D2 is S4 minus S3. I want a description. I don't want the equation or the formula. I want a description from you. What is this D1 or what is this D2? S1 is tax on the amount of income excluding arrears. S2 is tax on the amount of including arrears. So, no, don't tell me difference. So the correct answer is what? D1 and D2 is nothing but tax on the amount of arrears. D1 and D2 is nothing but tax on the amount of arrears. Yes or no? Then what is the difference between D1 and D2? If both are tax on the amount of arrears, then both amounts should remain the same, na? But D1 is tax on the amount of arrears as per the last year's rate of tax. Whereas D2 is the tax on the amount of arrears as per the current year's rate of tax. Rate of tax might be same, but your income level may increase, then the rate of tax will increase, na? So D1 is tax on the amount of arrears as per the last year's slab. D2 is tax on the amount of arrear as per the current year's slab. Now there are two possibilities. Possibility number one, if D2 is greater than D1, if D2 is greater than D1, what it indicates? If D2 is greater than D1, what it indicates? If D2 is greater than D1, it indicates that you are paying more tax on the arrears in the current year as compared to the tax which you would have paid on the arrears in the last year. In simple language, yes, Deva has said, na, current year tax on arrear is higher as compared to last year's tax on arrears. In this case, we are telling you that you will be eligible for a relief. And what will be relief? Relief equals to D2 minus D1. Relief equals to D2 minus D1. Have you understood this? Your current year tax on the amount of arrears is higher as compared to the tax which you would have paid on the amount of arrears in the last year. So what we are doing? We are offering you a relief. How much relief? Whatever extra tax you are paying on arrears in the current year, that extra amount we are offering you as relief. So once we give you relief, once we give you relief, you are indifferent. Like in the language of economics, in economics you had one chapter, indifferent curve analysis. Indifferent curve analysis, wherever you go on that curve, you will have the same level of satisfaction. Similarly, here we are saying that after getting relief, SSC is indifferent. Whether he pays tax on the amount of arrears in the current year or whether he pays tax on the amount of arrears in the last year. Why he is indifferent? Because he is paying the same amount of tax. Whatever higher tax he was paying, that is offered to him as a relief. So after relief, he is paying the same amount of tax. So he is indifferent. Have you understood this? Say yes or no. What if D1 is greater than D2? What if D1 is greater than D2? Means you would have paid more tax in the last year as compared to what you are paying in the current year. So you are in a advantageous situation or disadvantageous situation? You are in which situation? Advantageous situation or disadvantageous situation? Definitely you are at an advantageous situation. Relief is offered only if you are at a disadvantageous situation. Anyway, you are in an advantageous situation. In that case, we are not going to offer you any relief. There is no question of relief. When you are at a disadvantageous situation, you are facing a hardship in payment of tax. You will have hardship. In advantageous situation, you will not have any hardship. You will be happy. Therefore, government says, if D1 is more than D2, there is no question of relief. If you are at an advantageous situation, government will be at disadvantageous situation. So government says, you don't give us relief. We don't want any relief from you, but we are not going to offer you any relief. There is no question of relief if D1 is more than D2. Have you understood this? Yes? Yes or no? Okay. Now what we can do, we can move on to the practical question. You need not write anything, everything is written here. See, S1, S2, D1, S3, S4, D2. If D2 is more than D1, relief equals to D2 minus D1. If D2 is less than equal to D1, in other words, D1 is more, not eligible for relief. Everything is properly written. Let's want to calculate this here fast, very quickly. Pick up your calculators and give me the amounts. I'll read the question and you should calculate and give me the amounts very quickly. Let us start. Mr. Satish furnishes the following particulars of the previous year ending 31 March 21. Salary income computed after all deductions for the year is 670. So 670 is income for which year? Income for 2021. 670 is income for 2021 current year. During the year, arrears of salary received not included in above pertaining to the financial year 13-14. They have gone mad. He is receiving arrears of 13-14 in 2021, 90,000. So this will be added to current year's income. Assessed income of the year 13-14 is only 4,85,000. You are required to compute relief under section 89 available to him in respect of tax payable during the current year. The rate of tax for the assessment year 14-15 were as follows. See, this rate of tax are applicable to the previous year. This rate of tax are applicable to the previous year 13-14. That is corresponding assessment year 14-15. And current year tax rate you already know, na? Current year tax rate you might be already knowing. So now quickly give me the amount of S1, step 1. What is step 1? Calculate the tax liability of last year, excluding arrears. Can you tell me what is the amount of income of the last year, excluding arrears? Yes? Income of last year, excluding arrears is how much? Soumya, 670 is the income of current year. Deva, first of all, you tell me what is the amount of income. Forget about the tax. You tell me what is the amount of income. Step 1, you will calculate the tax liability on the income of last year, excluding arrears. Yes, you will calculate tax on 485. On this 485, you have to calculate tax. By applying these slabs. So out of 485, out of 485, you will remove how much? 180. You will remove 180. What is the balance? 485 minus 180, 3,05,000. On that you calculate tax at 10%, that is 30,500. To that you add 3% cess. 30,500 plus 3% cess. 30,500 plus 3% cess. 31415. This 31415 should be rounded off to nearest multiple of 10 rupees. So that will become, your S1 will be 31,420. Yes? Now quickly give me S2. S2 means tax on what amount? S2 means tax on what amount? $485 plus 90, that is 575. 485 plus 90, that is 575. So 575, you give me the tax up to 5 lakhs, it will be how much? 32,000. Up to 5 lakhs, not 32,000. On Above that 75,000, 20% tax, that is 25,000. 32 plus 25. Oh, sorry, 32 plus 15. 32 plus 15. What is 32 plus 15? 47. On that 47, you add 3% cess. 48,410. See, all those who are getting some other answer is incorrect. 48,410 is correct. Varshini madam, your answer is incorrect. 48,410. This is my S2. S2 is 48,410. So what is my D1? 48,410 minus 31,420. 16,990. 16,990. Very good. Now you give me S3. Now you give me the amount of S3. Can you tell me S3 means tax on what amount? S3 means tax on what amount? 670. Now you don't apply the tax rate of last year. You apply the tax rate of current year. You know na? Up to 5 lakh tax is 12,500. Above that 1,70,000 na 20%. That is 34,000. 34. Kritika, how did you calculate this 70 for 160? Have you applied the tax rates of 13, 14? You have to apply the tax rates of current year. Up to 2 lakh 50, no tax. From 2 lakh 50 to 5 lakh, 5%. Kritika? So, up to 5 lakh, your tax liability is 12,500. Above that, 1 lakh 70, 20% of that, 34,000. 34,000 plus 12,500 will be how much? 46,500. On that 46,500, you have to apply 4% cess. On that 46,500, you have to apply 4% cess. So, what will be your S3? 48,360. 48,360. Superb. Now you give me S4. S4 means tax on what amount? S4 means tax on 670 plus 90. That is 760. So you calculate tax on 760. Up to 5 lakh 12,500. Above that 260, 20%. 52,000. 52,000 plus 12,500. 64,500 plus 4% cess. Plus 4% cess also. 67,080. 67,080. Now you give me what is the amount of D2? $18,720. 18,720. Do you believe D2 is more than D1? Definitely yes. So what is the amount of relief? 18,720 minus 16,990. 1730. 1730. Now last point. Can you tell me what is the tax liability of the current year? When you will calculate the income of the current year, definitely you will include the arrears also, na? You will include the arrears, you will calculate income from salary, then house property, business profession, capital gain, other sources, gross total income. From that you will deduct chapter 6 deduction, you will get the taxable income. On that you will apply the tax. What is that amount of tax of the current year? Yes? 67,080. 67,080 is the amount of tax of the current year. Yes or no? From that, how much relief is granted to you? 67,080. From that you deduct relief now. How much? 1730. So what will be the tax liability after relief? Tax liability post relief will be 65,350. Tax liability post relief will be 65,350. Have you all understood the procedure for calculation of relief? Yes. So now we are left with only one perquisite here in this chapter, that is perquisite related to motor car. So we'll wind up the session here. Tomorrow when we meet, tomorrow morning 7 o'clock, when we meet, we'll complete the perquisite with respect to motor car. Thereafter, we'll move on to the chapter of income from capital gain. Income from capital gain. Yes? So if any one of you are having any doubt, please do ask right now. The session is ended. We are winding up the session. In fact, we have already completed the session. If any one of you are having any doubt, you can ask. Last calculation. Rizwan, last calculation. What is the tax liability of the current year? 67,080 is the tax liability of the current year. From this, you will get relief of 1730. So from 67,080, you deduct 1730. That is the tax liability of current year. Rizwan, understood? Thank you everyone. Bye bye.